Hi, my name is Dr. Clint Bourne, author of the text Making Sense of School Finance, a Practical State-by-State Approach. This presentation, School District Local Revenue, Part 1, aligns with the text, Chapter 2, and provides an overview of local revenue for school districts. Property tax, sales surtax, income surtax, supplementary taxes, and non-tax sources are public schools' local revenue sources. Local revenue is one of three main income sources for school districts, with state and federal revenues completing a district's income in general. The 10th Amendment to the U.S. Constitution reserves the power of states to devise and implement taxation systems along with the authority to regulate and control public education. As states entered the Union, each state's respective constitution stipulated commitments for elementary and secondary public education. To understand local funding, you must recognize taxing jurisdictions. As states entered the Union, 30 states designated all school districts in the state as independent, meaning all districts were local government subdivisions with the legal authority to raise taxes, levy taxes, and approve final budgets. 4 states in the District of Columbia formed dependent school districts with a parent government, which is a state, municipality, county, borough, township, or town. The parent government is the legal authority to receive taxes, levy tax rates, and approve final budgets. 19 states have a mixture of independent and dependent school districts. Therefore, the independent districts in these states have taxing authority, but dependent districts do not. The Census Bureau reported that 90% of primary and secondary public school systems in the United States are independent districts. Which type of governing structure is your district? On average, local revenue sources supply approximately 45% of the total funding for elementary and secondary public schools. State sources deliver 46.6%, and federal revenue completes a district's financial support with 8.4%. Property tax in 49 states, the District of Columbia funds many local public services, including elementary and secondary public education. Hawaii does not permit local property tax collection for schools. Property tax and ad valorem tax is the main local unrestricted income stream for districts across the United States at 84.2% of all local revenue sources. Property taxing government subdivisions include independent school districts, municipalities, counties, townships, and special purpose districts. Other local revenue sources include tax on general sales or gross receipts, individual and corporate income, and miscellaneous taxes, plus non-tax revenue. Non-tax revenue, typically restricted income, encompass tuition, transportation fees, textbook sales and rentals, school lunch purchases, district activity receipts, royalties, facility rentals, property transactions, investment earnings, fines, private contributions, and student fees. For property tax purposes, states generally classify property into 3 classes: general, taxable personal property, and intangible personal property. Real property, collected in 49 states and the District of Columbia, refers to permanent buildings, structures, and land. Residential, commercial, agricultural, utility, and industrial properties further distinguish real property classifications. Tangible personal property, collected in 43 states and the District of Columbia, denotes physical property permanently unattached to land, such as machinery and equipment, business inventory, and cars. Intangible personal property pertains to non-physical property, stocks, bonds, copyrights, and trademarks. Arizona, Georgia, Minnesota, and Tennessee tax intangible personal property. All states in the District of Columbia exempt certain types of property from taxation, such as federal, state, county, and government buildings and land, religious, charitable organizations and literary buildings, cemeteries, and healthcare facilities. Each jurisdiction differs by statute. regarding the particular exemptions. To calculate a district's property tax yield or collection, tax authorities multiply the tax base, which is the aggregate value of all taxable assessed property values in the district, by the effective millage rate, as seen in this illustration. This individual's Ohio property tax bill shows the various elements of taxation, such as 1. Property classification and true value. 2. Assessed value. 3. Millage tax rate. 4. Effective millage rate. 5. Reduction. 6. Homestead exemptions. And 7. Property tax that's due. Independent public school districts in Georgia, Florida, Louisiana, Pennsylvania, and South Dakota may levy local sales surtax for unrestricted revenue. Tennessee counties allocate 1/2 of the local sales surtax to public school districts. Independent school districts in New York may receive a share of local sales surtax from the county. Parent governments with dependent school districts often collect local sales surtax and share the proceeds with other commingled monies. Dependent school districts often receive a portion of the local sales surtax collection shared by the parent government. To calculate the dollars a school district collects from local sales surtax is quite simple. The district's aggregate local sales tax base multiplied by the authorized percentage rate equals the yield. Local income surtax is separated from federal, state, or municipal income tax. Kentucky, Ohio, Pennsylvania, and Iowa allow independent school districts to levy a local income surtax for school operations. Taxpayers pay local income surtax through payroll withholdings, quarterly estimated payments, or annual returns. Dependent school districts receive a portion of the local income surtax collection shared by the parent government. To calculate the dollars a school district collects from local income surtax is rather simple. The district's aggregate annual local income tax base multiplied by the authorized percentage rate equals the yield. 39 states grant independent and parent governments to authorize and levy specific local supplementary taxes with the aim of offsetting the reliance on property tax. Independent schools accept these funds from the treasuring agent, whether at the local or state level. For dependent school districts, the parent government obtains a supplementary tax via a local or state government agency and shares the revenue with the school districts. When state law permits, districts may authorize the following supplementary local taxes: amusement, business privilege, excise, franchise, local services, occupational license, parcel, per capita, real estate transfer, severance, utility, and motor vehicle tangible personal property. A school district's non-tax local revenue may include tuition, transportation fees, textbook sales and rentals, school lunch purchases, district activity receipts, service income, royalties, facility rentals, property transactions, investment earnings, fines, private contributions, and student fees. To summarize, a public school district's local revenue, the district's total local revenue comprises collections from property tax, income and sales tax when permitted, supplemental tax when permitted, and non-tax revenue. Non-public schools typically receive the majority of their local revenue from student tuition. For Catholic schools, the typical local revenue sources derived from student tuition, averaging 59% of the total local revenue, parish contribution, 29%, fundraising, 10%, private donations, endowments, and corporate or foundation giving, 4%. Public charter schools do not charge student tuition. According to the Education Commission of the states, public charter schools may receive local funding in a number of ways. 1. Charter schools in 19 states and the District of Columbia receive state funding in a similar manner as traditional schools, with no access to local revenue. 2. Charter schools in 15 states receive local revenue on the same basis as traditional resident school districts. Charter schools in 8 states receive state funding with access to local revenues within the state formula. Charter schools in Kansas and Kentucky do not specify how charter schools are funded. In Ohio, charter schools may receive state funding in a similar funding formula as traditional schools, and school districts can levy local property tax for charter schools. 5 states, Montana, Nebraska, North Dakota, South Dakota, and Vermont, do not have public charter schools. This concludes the School District Local Revenue Part 1 presentation.